Master your market mind. Warren Buffett's 5 psychological rules. Did you know that 80% of people lose money in the stock market for one simple reason? They fail to control their fear and greed. Warren Buffett once said, "The most important quality for an investor is temperament, not intellect." This means that in the markets your mental fortitude is more critical than your brain power. Friends, I ask for just 15 minutes of your time, and I promise you in these 15 minutes you will learn lessons you may have never encountered before. This video isn't about which stock to buy or sell. This is about trading psychology, the mindset that can set you on the path of legendary investors like Buffett. As Buffett advises, be fearful when others are greedy, and greedy when others are fearful. Are you ready? Give me 15 minutes and I will teach you Buffett's most crucial psychological lessons that can permanently transform your investing mindset. Let us begin. Lesson 1. Conquer fear and greed. What is the greatest weakness of those who lose in the stock market? It is not a lack of education, it is not poor technical analysis, it is not even having less capital. Their greatest weakness is in fact fear and greed. What did Warren Buffett say? Be fearful when others are greedy, and greedy when others are fearful. What does this mean? When everyone in the market is euphoric and stocks are relentlessly climbing, that is when people become the most greedy. They think, I must buy now or I'll miss the opportunity. This is the biggest trap. Conversely, when the market crashes, greed dominates the screens and fear-mongering news spreads. That is when people become the most fearful. They think, sell everything at S all over. But the truth is, the winner in this game is the one who can master their own fear and greed. Because the market's greatest enemy is not some external force, it is your own mind. When everyone is greedy, you must be cautious. When everyone is fearful, you must look for opportunity. This is exactly what Buffett does, and it is the first and most vital lesson in trading psychology. So ask yourself, the next time the market crashes, will you panic or will you search for opportunity? Lesson 2. The supreme weapon is patience. What is the most difficult thing in the world? Is it speaking less, waking up early? No, friends, the most difficult task is to have patience, and in the stock market, patience is your greatest weapon. Warren Buffett said, the stock market is a device for transferring money from the impatient to the patient. What does this mean? In this game, money flows from those who cannot wait to those who can remain calm. Most people think buy today, sell tomorrow, make money fast. But in reality, Buffett made billions because he learned to wait. Think of the market as a jungle. There is commotion every day. The lion that wins is the one who waits for the perfect moment to strike. A lion that chases after every rustle of a leaf will never succeed. Similarly, a true investor is one who waits for the right opportunity, and once they invest in the right company, has the patience to hold on. Buffett says his favorite holding period is forever. So the question for you is, the next time a stock rises or falls sharply, will you rush to sell, or will you have the courage like Buffett to hold steady and create real wealth from the market? Lesson 3. Build unshakable emotional discipline. If I asked you what the most essential skill for winning in the stock market is, what would you say? Good stock selection, fundamental analysis, technical charts, following market news. Friends, all these are important. But according to Buffett, the real skill is emotional discipline. He said, the most important quality for an investor is temperament, not intellect. You win in the market with your temperament, not just your intellect. Why is this? Because something is always happening in the market. Today, the market is up 500 points. You get excited. Tomorrow, it is down 800 points. You get scared. This is the ultimate trap. Fear and euphoria. These two emotions are an investor's greatest enemies. So what does Buffett do? He blocks out the market's noise. His principle is simple. Be fearful when others are greedy, and greedy when others are fearful. But most importantly, it will stay calm when others panic. When the whole world is fearful, Buffett remains calm. When everyone is celebrating, he stays vigilant. The true meaning of emotional discipline is to develop an inner state where you can control your emotions no matter how much the market rises or falls. When the market crashes, most people sell. When the market rallies, most people buy out of FOMO, fear of missing out. This is a lack of emotional discipline. Learn from Buffett. If you have chosen a company after thorough research for the long term and its fundamentals are strong, there is no need to panic when the market falls. Buffett himself says, if you are unwilling to own a stock for 10 years, don't even think about owning it for 10 minutes. A story from 2008. During the global financial crisis, the world was in a panic. Stocks had fallen by more than half. People were pulling out their money and running. What did Buffett do? He invested $5 billion in Goldman Sachs. He bought more shares of Coca-Cola. While the world was fleeing, Buffett was calm. His emotional discipline was intact. Now think, is this easy? If your portfolio fell 50%, could you sit still? This is what Buffett did, and in the next 5 years he built a fortune. So the question is not which stock to buy, the question is how much can you control yourself when the market crashes or soars. Lesson 4. Escape the herd mentality. Have you ever noticed a stock's name suddenly trending everywhere? It's being discussed in WhatsApp groups, news channels are flashing higher target prices, and people on Twitter are saying, "You'll regret it if you do, you end by now." And then what happens? A stampede, everyone rushes to buy. This is the herd mentality. What does Warren Buffett say? You can't buy what is popular and do well. It is difficult to build wealth by following what is already popular. Why does following the crowd lead to losses? Because by the time a stock hits the news, its price has usually already skyrocketed. People buy out of FOMO. Let me tell you the truth. The stock market rewards those who think and strategize. It punishes those who merely follow the crowd. Buffett's deeper lesson is this. When everyone becomes greedy and starts buying without thought, that is the time to be cautious. When everyone is fearful and rushing to sell, that is when the smart investor sees opportunity. The problem with the herd mentality is that you abandon your own research. You act on hearsay without understanding. Your decisions depend on the crowd's actions, not your own analysis, and that is the most dangerous thing. A real-life example. The dot-com bubble, 1999-2000, all internet stocks were flying high. People said this is the future. This is the chance to get rich. Everyone was buying internet stocks without knowing the actual business behind the companies. Then the bubble burst. Millions of investors lost their money. Buffett stayed away from internet stocks during that period because he didn't follow the crowd. He said, "I don't invest in things I don't understand." Now think. Can you do the same when the entire market is jumping into a stock? Can you remain calm? Can you control yourself and refuse to act without your own research? If the bridge's capacity were 150 kg, you would walk across with confidence because you have a margin of safety, friends. This is the same principle Warren Buffett uses in every investment. Buffett says the 3 most important words in investing are margin of safety. This means you should buy a stock at a price significantly below its intrinsic value. This ensures that even if your calculations are slightly wrong or the market behaves unpredictably, your losses will be minimized. We are human, we can make mistakes. A company's earnings can change, unexpected news can spread fear. A margin of safety protects you from that uncertainty. The biggest mistake people make is investing in overvalued stocks out of FOMO, thinking, if I don't buy now, I'll miss out. But that is precisely the time to pause and think. Buffett says you don't have to do extraordinary things to get extraordinary results. You just have to do ordinary things exceptionally well. And seeking a margin of safety is one of those simple things you must master. How does it work? It gives you breathing space. If your calculations are a little off, you still remain safe. Remember another Buffett quote, investing is not about predicting the future, it is about preparing for the unknown. So always buy stocks where even if the market falls, your loss will be minimal. If the company's earnings slow down, your portfolio will remain stable. Your path to a master's mindset. Learning to trade is easy, but living with understanding is rare. If this video has changed something within you, if you learned something new today, let me know by liking this video so I can see that your journey has begun. Please subscribe because what's coming next will be a game changer for you. Leave your questions in the comments. Your question might change someone else's thinking too. And yes, share this with one friend who can't find their way in the market, because sometimes one video can change a life.